All right. Well, hello, everyone. I'm channeling City Slickers this morning. My hello. You remember that hello? Welcome to welcome to us this morning. Welcome to Professional Insights. Yes, I remembered what this is. Professional Insights, hosted by the National Referral Network and brought to you by two rakishly charming dudes, who have no hair.
It was the best thing I ever did.
Yeah, ask my wife; she'll agree. Anyway, the purpose of this little chat is to dispense information and insight and wisdom for all those who would ingest it for their own uses. And we hope that everyone who does will get something valuable out of it. And hello, is it Ephraim or Ephraim or?
I go by either. My parents called me Ephraim, so that's
Ephraim. I was going to call you Eph just to be safe. Ephraim Olson, you're a tax attorney. Where are you out of?
I'm based in Puerto Rico, San Juan, Puerto Rico.
You're in San Juan, Puerto Rico?
Didn't see that one coming.
Wow, I didn't see that one coming either. Wow. Okay. So, how's the weather in San Juan?
I'm not there today. I'm headed back tomorrow. So
okay.
So I'm in.
Well, when you get there, how will the weather be?
Always perfect, except for hurricane season. So
okay, well,
75 degrees, think 78 degrees.
Okay, you're breaking my heart. Okay, so Mike here in Utah, and it's
freezing cold. Yeah, it's 30 degrees.
And, you sneeze and the droplets freeze in midair. And I'm in Southern California, sunny Southern California. It's not so sunny today. It's just kind of cold and clammy today. But we're not here to discuss the weather. We're here you're a tax attorney, and you're here to talk with us today about free money that's available to business owners that they're not aware of.
Can we say free, Mike? I don't know if we can say free.
Okay, so for all those compliance officers listening, I'm sorry. And I'm going to stand in the corner after we're done here, and I'm never going to do that again. This is not free money, but these are tax credits that are available to business owners. And you are here to talk about when and where and how those are available. So let's get into this. What are business owners not aware of that they should be?
So let me just give a little bit of background. So I'm a tax attorney. I have a tax law firm. We do all sorts of tax strategy, tax planning work. In the course of my work, I have worked with a lot of accountants, hundreds of accountants, because I've worked with hundreds of businesses. Many of them have their own accountants. I don't do accounting. As part of that process, I have come to realize and have seen that many of the accountants are not aware of all of the tax credits that exist. Mm-hmm. And it makes sense if you think about this, why. So a small accounting firm, a medium-sized accounting firm might have one client in their entire history that has this very specific film credit, tax credit, sort of qualifying client, or some sort of an environmental something client that qualifies for this specific tax credit. So for them to sort of pick up that credit exists, to learn the credit, and then to apply the credit for one client, it just doesn't make sense from monetarily. So what I found, I have been aware of tax credits and have asked businesses why they're not claiming them. And they say, well, I'll ask my accountant. The accountant says, well, the truth is, it's not worth my time to learn it. So happy to have you claim it, happy to have someone else claim it, not worth my time to do it.
So in other words, these credits are available to businesses in specific situations, and often accountants don't know enough about the specifics to point their clients in this direction or that direction regarding those clients. Is that basically it?
That's correct, yeah.
And I think a lot of the CPAs that I've talked to, Ephraim, they say they don't have the bandwidth, right?
Exactly.
And I've always kind of picked on them for not having the bandwidth, but how you present it now, I feel kind of bad for picking on them.
Yeah.
Well, again, I don't fault them. I'm not. This is not sort of ragging on any accountants. I would do the exact same thing in their shoes, which is like, how do you make them? How do you make this make sense for you? And it probably isn't reading through 100 or 500 different tax credits across multiple states to figure out if you might have one client in some future day that might meet the requirements for this tax credit, right? I'm not faulting CPAs. What I'm saying is there's then a disconnect, which is businesses qualify for credits. I mean, credits are out there, right? Like, the thing that's fascinating is there are dozens of credits in every state. There are dozens of federal credits that have lots of real money. hundreds, thousands of dollars, tens of thousands of dollars per employee, per dollar spent, per square foot, whatever the sort of criteria is. And so they're out there and these businesses qualify for them, and the government's no worse or better off for you not claiming the credit. The credit exists for a reason, to give you an incentive to keep hiring this type of person, or to keep these people on your payroll, or to pay more than a certain amount, or to give, paternity and maternity leave. There's credits for that. Like there's incentives for that. And it makes no sense not to claim it, because the government wants you. They need you to. They want you to.
So can you give us a specific example of, something you've seen where somebody claimed a tax credit? Give us an example of what the economic impact was for them and how they were able to claim it.
Yeah. So I have helped clients claim credits, or helped sort of done the analysis for credits. And I do quite a bit of that, right? It's, again, doing an analysis of the facts, what zip code they're in. A lot of them are zip code specific. But we've had clients claim credits in, in Utah, but, in other places as well, or states as well, where it's, like I say, I think it was some sort of rehabilitation credit, that if you're in a certain zip code, it's an area that isn't, it's falling down, or, it's not doing well. So if you invest money in infrastructure, even if it's your own building in this, zip code, then they will give you money. And I don't remember the number, but it was like several $1,000s. I believe it was over $10,000, $15,000, $20,000 for this credit. And it's just because they exist in a zip code and have put money into like keeping their building up. You're right. Like that was all it took. And it was sort of like free money. And when you say, again, not free money, but it is free money in the sense that they did the expenditure, everything was already spent. This was just, they qualified and they didn't realize they qualified.
Now, Ephraim, a lot of people don't understand. I mean, we've talked about this gap, right? But what I've read is that some of these tax credits, you can go back 3 years. And the one that we've talked about a lot with CPAs is, because they've heard about the R&D tax credit as one, but there's been companies that have gone back 3 years and recaptured $40,000, $50,000, $60,000, $100,000.
Wow.
Well, I don't know the source here, so don't quote me on this, but I read a source, and I believe it was from the IRS, that said that they thought 80% of R&D credits were not claimed.
Wow.
It was like almost 100%. It was like the vast majority of R&D credits that exist and are available are not claimed,
because they've really opened up that door.
And I want to say, we're not promising that if you talk to somebody who knows this landscape that this will happen to you. So to be very clear, we're not making a promise here of some kind of monetary benefit to every person who watches this. So we kind of have to disclaim that a little bit. But nonetheless, there are credits that are available to certain types of businesses in certain states under certain circumstances. Is that a fair assessment?
I think I would go a little bit further. I would say that, from my experience, the majority of businesses out there qualify for credits that they're not claiming. Okay. And so, and that's in every state, sort of across the board, regardless of their size. Obviously, the smaller you get, the smaller those credits get. Some of them go away if you don't have employees. Say it's a single person owned business. They may still qualify for credits, but the credits become more sizable when you have investment in research and development, when you have investment in infrastructure, when you have investment in new buildings, when you have more than X number of employees. Obviously, those credits become more substantial. But I can say that my experience has been, that most businesses, I would recommend, this is what I would say, I would recommend every business does something to figure out if they qualify for credits that they're not claiming.
Okay, so that leads me to my next question. How do they do that?
So that could be a conversation with their CPA, right? And just a frank conversation. Do you know all the credits I might qualify for? And the answer should be, an honest CPA might say, should say, no, I don't do tax credits beyond these one or two that I look at, and then find somebody else that does claim. So my firm can help with that, but there are lots of other firms out there likely that can help with that as well.
So if one of the challenges that we have with working with professionals across the board is this paradigm of not wanting to refer out because they don't know what that experience is going to be with that client. And so how do you bridge that gap, or how does a business owner, right? Because they too have a paradigm, right?
Yeah.
It's
Yeah.
like normal people going to see a doctor. We put a CPA on a pedestal
Yeah.
and just take everything for gospel.
Yeah.
So how does a business owner tell the CPA, like, hey, I want to know if I'm eligible for these, but how do we bridge that trust gap or how are you bridging that trust gap between yourself and the CPA saying, hey, I'm going to take care of your clients?
Right. Well, for me, I don't do any accounting work, right? So for me, there is no overlap. We work in different spheres. If they can claim the credits, I do not need to do that, right? And there will be some credits they do claim, but I'm happy to help do the analysis on my side and claim credits that the accountant doesn't have the bandwidth to claim. You know what I mean? And work with the accountant. I don't do the accounting work. I won't steal the client. I have no reason to. I'm happy to help where it's due, but my job is sort of, if we have the line of sort of accounting and then legal, I'm everything on this side of the legal sphere. So I can do the legal analysis, I can do whatever, and then I can push it out into sort of, I can do all the other stuff legal. I don't do any of the accounting work. So for me, I'm just very, very frank with the business owner and the accountant, which is I'm not going to take this because I can't, even if I wanted to. I just don't do that work.
Okay.
And a lot of companies, I mean, one of the biggest questions is this fear of, hey, how much is this going to cost me? And I know that there's all kinds of pricing structures. I mean, a lot of companies will do we'll call it a no cost valuation because there is a cost to your time.
Yeah.
But how does the structure usually work in terms of wanting to engage a firm like yours or a firm like any of these firms that do tax credits?
Yeah. So again, exact same thing, right? Sort of a no cost. We're happy to do the analysis. Once we determine some of the credits that you may or may not qualify for, then we can talk about a price. We can come up with a price. It's usually a fraction, a tiny fraction of the credit they get. Sort of less than 10% or 15 or 20%. It's usually a small percentage of what the credit ends up being. But that's we can talk about that once we determine how many credits and how difficult the credits are to do the analysis on.
And we call this shameless plug time. But as
the shameless plug.
Yes, right, shameless plug. We've got the crawl there. There's you across the bottom, but you're a new member of the National Referral Network. How do you see your membership in the network enhancing what you do?
Well, so again, going back to what I said at the beginning, as a tax attorney, I work with hundreds of CPAs. I work with hundreds of financial advisors, and having a network that is plugged into people that are professionals, I stay in my little lane. I do it very, very, very well, but I have to work with hundreds of other professionals along the way, and having a network that I can reach out to and find people that are good and have been vetted and sort of work well in the sandbox together. You know what I mean? As long as we can all play together well, then this would be very, very helpful to me.
Okay. All right. I think Mike.
Well, here's the other.
You kind of said it all there. I was left verklempt.
Well, and that's really all I had to do was put out the little ARF shameless plug with the National Referral Network. And as always, Ephraim, thank you. I know that you've been traveling a lot. You were in court yesterday. We talked about you're extremely busy. So we certainly appreciate your time and information. For everybody watching, please like, subscribe. If you find this valuable, share it with your CPA. Let's see how we can help bridge that trust gap and get some tax credits back. Because wherever the economy goes, tax credit money is always good money.
It's always good money. Yes. Yeah. Paying less taxes is always a good thing.
Yep. And get educated. That's what we're here for. And if there's anything we can do to help, please let us know. Mike, any final thoughts?
No, I really appreciate it. I think I want to talk to you. What did I miss?
Well, like I said to everybody, you should, Mike.
Well, let's, no, I thought it was very informative, and I think it's going to be very valuable, and this is stuff business owners need to know. So we really thank you for being here and sharing this with us.
Absolutely. Thanks for letting me come. Appreciate it so much.
Guys.
Yeah. Thanks. Bye.